The Trump impact on markets, the extent to which we're seeing it. I mean, we see a bit of strength in the dollar. We see a bit of steepening in the curve. We see US futures stocks actually up quite substantially. What do you make of the scale of the response we're seeing here?
Yeah, well, it's a moderate scale of response, but I think all going in the kind of predictable direction. Like you said, some of the big movers would be stronger dollar and lower treasuries. We've got Bitcoin, which is on a bit of a tear as well. Trump seen as pro-crypto. I think the yield curve is the place to really focus your expectations, because if you think over the last couple of weeks, the narrative has been that the Fed is getting closer to being able to cut interest rates. We've seen those September bets come back into the market, pushing down the low, short end of the yield curve. But at the same time, if you think that Trump is inflationary, if he's going to be spending more, if he's going to be increasing the supply of treasuries in the market, then that's going to weigh particularly on the long-term yield. So that pivot between sort of the short end and the back end seems to be where people are expressing it. You know, we're minus 20 basis points, I think, now on 2s, 10s, the highest in several months, and that continues to kind of push in that direction. So maybe that's where people are looking for the easiest way to tease out all of the different narratives there.
Yeah, and it's interesting to see the yield moves across the curve. I mean, they're not that pronounced, but you see how it differentiates between the 2, the 5, and all the way down to the 30, where yields are higher at 4 basis points. Tie that into the dollar then, because the Bloomberg Dollar Index, the dollar is bid today up 0.2%. Is that a risk haven move, a safety move, a hedging move, or is that a move more linked to what we're seeing in terms of yields and treasuries?
No, I think more yields and treasuries, and in general, basically, you know, to step back a little bit, the shooting obviously has been interpreted, but my wife told me about it. The first thing I thought is that's just going to increase his chances of victory then, because, you know, the fist in the air and all of that, quite powerful images as well. Trump policy should be favourable for the dollar, not least because they push up treasury yields, but also if he's imposing greater sanctions on the rest of the world, then that will also weigh down the currencies of competing nations and therefore lift the dollar, which is why you see the Mexican peso under threat as usual, but also those Asian currencies coming under the cosh a little bit in trading today, I think.
What has the bigger effect this week? What happened over this weekend politically? What Jay Powell says to David Rubenstein tonight? Or what Goldman Sachs reports in the earnings season more broadly? Kind of which of those 3 factors do you think actually has the greatest potential to produce more volatility?
Don't think any of them necessarily would be that much in conflict with one another, though. They all seem pretty equities bullish, right? Depending on what we get from the earnings. But if you're looking at steeper yield curve, that speaks to, you know, bank equities performing strongly. If you're thinking about a more stimulative approach from a Trump success story, then that's going to support equities as well. If you're thinking about Powell, you know, he's probably happy with the way the markets are priced, the more supportive Fed. Also good for equities. So from that perspective, at least, you know, maybe that's actually a place where people can be pretty ambitious and optimistic when they're putting their bets going into the week ahead.